Gautam Shah is with us. Let's talk about price action and where we go from here. Founder at Goldilocks Global Research. Gautam, good morning. Great to have you with us here. Prashant, this side. Just really one for the history books. What we've gone through over the last 6-7 days would rank right up there, especially as a trader, Gautam. So much volatility and so much excitement, so much drama. But what from here now, Gautam? Do you believe the worst is behind? We're at about 300 right now.
Good morning, Prashant. Well, drama is part and parcel of today's stock market. I think because we live in such a noisy world where there is so much happening. I think since the COVID lows, we've had so many events, whether it's geopolitics or earnings or the Trump trade that has played out in the last 1.5 months. But I think markets need to discount all of that very quickly, which is what markets have done. I think every bear market has two phases. One is that of price correction and the other is that of time correction. I think we ended the price correction last Monday at levels of 21,800 because I think the technical studies, the breadth, the sentiment, the news flow, everything came together to possibly indicate that it was a panic bottom. Thereafter, we've seen very good constructive action. I think the Nifty is up about 1,200, 1,300 points in no time. And I think we've entered a period of time correction. I think a lot of money which was on the sidelines is now at work because I think participants believe that most of the negatives are discounted. So that's the reason you are seeing this very good looking flamboyant rally. But I would not read too much into it. I think 23,400 and 23,800 are numbers to which the Nifty can move to. And broadly over the next 2.5 months, I think we are going to stay in a sort of a range. We will not make significant we will not see significant upside or significant downside. But between now and the end of the year, I think it's going to be a stock pickers market. Just be in the right stocks, in the right sectors, and in the right themes. I think there is money to be made on the long side. So I do believe that the worst was over at the recent low because I believe that the charts are well placed on the weekly and on the monthly time frame. And I think a large part of the news flow has already got discounted. I guess it can't get worse than this.
Sounds good. Sounds good. Gautam, can you just repeat the Nifty targets for us? So by December 25, where do you see the index?
Well, Surabhi, it's not about the index. I think let me just reiterate that because I feel that it's going to be a stock pickers market between now and the rest of the year. But still, if you want numbers, I think 23,800 to 24,000 is where we can move to in the near term. Can we go beyond that? We can definitely go beyond that and see much significantly high levels. But I would like to cross the bridge when it comes. I want to work with a bullish mindset. I want to buy the dip now because in the last 6 months, it's been a case of lower tops and lower bottoms. I think over the next 6 months, it's going to be a case of higher tops and higher bottoms.
All right, Gautam, you mentioned numerous times out there, it's going to be a stock pickers market. What's looking good on the charts? Give us a few stocks.
Well, anything that has relative strength and anything that did not make new lows last week is something which is on top of our list in terms of longs. And I think on top of that list is financial services. I mean, if you look at the Bank Nifty, today it is at levels of 52,000, which I think is an important resistance. And once this is taken out, I think it might be the first index after financial services to actually make new lifetime highs. So I remain bullish on the Bank Nifty, and I think there are immense opportunities. And the way some of the top banks handled the recent weakness itself was quite commendable. I think I spoke about it in our last interaction as well. So we are very positive on the entire financial services space. I think it will go on to make a new lifetime highs, followed by the entire PSU basket. I'm actually refraining myself from staying away from any company or stock that has something to do with foreign soil. Because in today's world, you don't know, what can come out of where. Even though the markets are all good today and autos are doing well, I'm still very comfortable with the PSU as a basket, valuations-wise, chart-wise, ownership-wise. And I think it could be one of the standout performers for the rest of the year. And finally, I think metals. It's been my favorite for a while now. Yes, it saw a bit of a dip after the market weakness, but I think it's setting up really well right now. And I think a 10 to 12% move on metals looks quite likely.
Okay, those are some very interesting ideas and observations, Gautam. So you're saying PSUs are still looking good to you. Chart structures are still positive. Metals 10 to 12%. And can you dive a little deeper in financials? I mean, is everything looking good? Is it more banks? Is it private PSU, large NBFCs? I mean, what within financials looks the strongest?
Well, gone are the days where you could buy into anything and everything. I think we had that phase for about 2.5 years where you bought anything and you made money. I think with this correction of the last 6 months, the men have been separated from the boys. And if you really see, top quality has stood out. I mean, a case in point being what HDFC and ICICI have done versus an IndusInd Bank and maybe some of the other smaller banks in the market. So I'm staying with the industry leaders and challengers, the big boys in each of the sectors. I know the screen looks great today and everybody will suddenly become very optimistic, but I think let's have a realistic view on the markets, and therefore I want to stick to the big names. So the top three banks, the top two NBFCs, I think they stand out for me, and I think they'll do very well.
Top two banks and top three NBFCs. So you'll stick to the larger names within banks and non-banks. Just a word, since we're talking financials, what about these capital market stocks? I mean, they were also the poster boys and poster girls of the rally up until September, right? Brokers, wealth managers, etc. What do the charts say here now?
Well, I do believe that equity markets are not running away anymore, which means that it's going to be a huge challenge for the Nifty to go out there and make new lifetime highs. I do believe it will happen, sometime over the next 12 months, but I'm not preparing myself for the same. In that kind of a range-bound environment, I'm not very comfortable with the capital market stocks. I think capital market, defense, railway were themes that did very well in the last 2.5 years. I think that the newer themes have emerged in the last 6 months, which you would have noticed, and that's the reason I'm sticking to some of the other names. On the other hand, I think real estate is one sector which can really come back very strongly. I think it witnessed a large dip. It's a structural story. A lot of stocks are at long-term supports, and the top 4 or 5 names in the real estate space have the potential to deliver about 20 to 25% from here. So I would be very comfortable buying into real estate at these prices.
Okay. All right. Gautam, you mentioned about the financials and the Nifty Bank. What are the levels we should track out there? The Nifty Bank now is holding about 52,000 mark. The last time we saw this level was on 18th of December, at around 52,500 is what we saw on that day. Where is it headed?
Nigel, the interesting data is the average decline on the whole of NSE in every single stock is about 42%. That's the kind of bear market that we've witnessed in the last 6 months. In the earlier times, this could have happened over the last it could have happened over 1.5 years. So I'm sure there's another camp of people who believe that this is going to stay for the next 6 to 12 months. But I think what could have happened over 1.5 years has happened in 6 months. I think that's one key point. Secondly, I think the way HDFC Bank has held out in this terrible looking bear market of the last 6 months is quite commendable. And this is where smart money seems to be hiding. So I do believe that some of these top stocks will do well, and therefore the bank Nifty can easily move towards a level of 55,000. And if you have to think 18 to 24 months, I think a 60,000 number, which we have been working for almost 12 to 15 months, it remains on track. So I think as investors, you should be positioned for that number.
Okay. All right. Got that. So the Nifty Bank is the one that's revving up the engine. HDFC Bank relatively underperformed when the markets were going all guns blazing. And when the markets dipped, actually, it was holding its own. And that was the pocket to hide in, as Gautam mentioned. Gautam, let's shift focus a little bit away from equities for just a bit. How's gold looking on the charts? Where is that one headed? Because all that glitters is gold. Just take a look at the way that one has moved.
Yeah, it's been quite a glitter, Nigel. And I think every single time I've been on your channel in the last couple of years, I've spoken about gold beating the Nifty benchmark returns. And I think that's played out so far. And I think it's going to play out over the next 6 to 12 months as well. Because I don't see more than 10% upside on the index, even now, despite today's good-looking rally. But in that context, I think gold continues to be very strong. It is at our medium-term target of 30 to 50. It's looking slightly toppish here. And I think the market might just get into risk-on mode. So gold and silver could take a bit of a backseat in the near term. But if you have to take a 12 to 15-month view, I think we are still looking at lofty targets of as high as 37, 3,800. But near term, I don't think today's prices is an opportunity. I think a 5% dip could come by. And if that comes by, I think go long. And as investors, you stay put. You don't try to trade gold because it's a mega trend. It will do well. On the other hand, I think silver is a bigger opportunity. I think that is likely to stand out over the next 1 year. And not to forget what NYMEX crude has done. After almost 2 years of range-bound activity, it's broken 65. Looks like there is another 10% downside coming on NYMEX crude. And talking about external factors, dollar index at 100 at levels of 100, I think another 3-4 percentage points downside is likely there.
And that is on the dollar index?
Yes, please.
On the dollar index, 3-4% down. So dollar index, we're looking at a level of 96, 97 odd. On crude, if I got that correctly, that could be another 10% downtick even from here. And silver could outperform gold. What are the levels on silver, Gautam? Because silver has been holding in this vicinity of around, I think, 29 to around 34 or thereabouts. It's been very volatile, but we have seen in the past when silver gets its act together, it outperforms gold. So where is that one headed?
Absolutely. I think silver took a bit of a backseat given all the problems around economics and inflation and recession and all the talks around it. Maybe that's the reason it's not done as well. But I think 29.30 is a nice long-term support for silver in dollar terms. And I think if all goes as per plan, I'm looking at a number of about $43 to $45 over the next 12 to 15 months. So that's a nice 30% move even from these levels. So if you're taking some profits in gold, might be a good time to top up in silver.
Okay, so book profits in gold, buy some silver. That's helpful advice. But Gautam, what about the mothership, the mother market? I mean, look at what's happened, right? I mean, what drama of the last 2-3 weeks. So given the violent nature of the US market correction, but then the recovery has been equally dramatic. So are chart structures kind of damaged? Are they okay? Are they looking okay? And then definitely a word on the US 10-year, because that's where there was sudden panic. The yield hit 4.5%. Is the worst over, or is there some slightly longer-term damage here?
Well, it's violence everywhere, Surabhi, whether it's our movies or whether it's the stock markets. I think that's the way of life today. And I think markets are just too fast because of this flow of information and AI and social media. And I'm not surprised that this is the kind of world that we live in. I do believe that the Dow found a bottom at that level of 37,000. 45,000 became 37,000. 37,000 is a long-term support. If you go back in history, 2021, 22, 23, you will realize that around 37,000, there was a lot of support. And I think there are some positive divergences that have developed on the charts. And when I see some of the top names, Apple and Amazon and Alphabets and some of these stocks, I do believe that the worst for the time being is over for the US markets. So I think we are entering into a phase of extreme noise to some stability. And that's the reason even the US markets are likely to go through some time correction. In fact, as we speak, in a week from now, we are actually launching our US product because we believe that there are immense opportunities in the US markets, even from current levels after the recent damage. So I would be constructive on global equities in general, led by the US markets.
Violence in movies. What is the...
That we're used to, but the stock market violence was unnerving.
What is the last 7 days in the market? What movie does it resemble? I mean, I don't know what the last action movie we've had.
Not that I saw all of
I didn't see Sikandar, so I missed it.
What about Godfather? Make an offer you can't refuse.
Yeah.
All right, I think we'll wrap it up here. Thank you very much, Gautam. Appreciate. I don't know if you have a movie which you want to put out, what it looks like, but maybe. Sorry, go on.
Well, I just saw the Sunny Deol one over the weekend, and that's where the violence part came from.
Which one?
Which one is this? I don't know.
This is Jat of Sunny Deol.
Jat. Oh, lovely. Okay. All right. Thank you very much for that. Appreciate your time here, Gautam. And we will, of course, speak again soon enough. I think...